Welcome to Trading Lounge and the indices, and starting with the SP500 here. So in a bit of a nutshell, we're hitting the 5,000 here, which obviously is a large number, and we would expect the market to, vibrate around this number for a little while, and that will leave the Nasdaq at the 18,000 as well. Not quite there just yet, but should be pushing up there. Now, this particular move up through here, it can be counted in two ways. So we can count this here just as 1, 2, 3, 4, and 5 up here for this way here. We can also count it a little bit differently as well. So I'm just still toying with the idea to see how it sort of plays out in its later stages. So over here on this chart here, we've got 1, 2 here. Instead of having 3, 4, 5 to have wave 1 up here, we've got this here as 1, 2, 3, 4, and 5. It's sort of okay, both of them are sort of fitting there, but it's not a really big deal, but because it's going to, stall at the 5,000. Yes, it can push up through it and then eventually pull back. Larger numbers attract large orders and just tend to continue to pull the market to that particular number. Yeah, we'll just allow that to play out a little bit. So there's two ways to count everything. This move through here, this part here is pretty straightforward, and we can just go to the intraday. Maybe it'll just cut straight through to 1,000 here, and yeah, so you can see that it's just really arrived here at this point. There is going to be a sort of a reaction and pushing up and pulling down and so on. So there's not much to do here, but we should see this market push up a little bit higher. So it was put to me that because in a lot of these cases I just call out trades on the chart here for this, and I was thinking, well, it was put to me I should put them in the portfolio, but then I sort of realized that the Europeans and the Asians, including myself, use CFDs, where in the US they use, the mini contracts and so on. So I was thinking that what I could do is that where I put the US stock trades and other trades in here, I could just use ETFs in here, so the triple Q and the SPY and so on, and load them in here if they're just not swing trades, and I'll put a notification out. Or I could just also place the trades into our stock chat room as well here. So like I've done with these ones here and so on, but yeah, a little bit trickier to manage, but I can plonk them in here, and I could probably notify people if you're in a particular group here. I can notify that particular group as well. So anyway, I'm just still sorting that out with that new portfolio, so just letting you know that where I'm up to with it. And yeah, so that's that on that side, and that's just the S&P here, so we don't need that. And the Nasdaq here, so you can see that it's approaching the 18,000 here. And I mean, I always call 8 a profit-taking number. So wherever I see number 8, could be anywhere, you'll see that the bids will build up in the depth. And yeah, it's always a good place to take some money off the table here as well. So let me just think about this. Where should we go from here? I'll just cut straight through. Yeah, there's probably two ways to count this too, but I feel like it doesn't really matter at this point. I'll just go to, I think we've been working on the 20,000 here, so I'll just cut in here. So we're still a fair way away from it, from the 18,000. And the first thing here is that we've got 18,100, so 1 is the strongest number, then 1, 5, 8, and 3 according to trading levels, my little thing. Fibonacci. This is just Fibonacci's price ratio. So what I'm just doing here for a moment is that this will be the initial swing range for the 18,000 here, and you can also see at these points here, like group 2 here, I'd call it 65, which is 17,650, and 72 and 8 here again. You can see here that it's played out here and here, so it's just naturally going to offer the support when it comes back down here. I mean, of course it can test in here further, but this is whatever you do in this, when you arrive here, whatever you do in this space here, there's going to be more price action coming here. So, you know, it's not like you're going into a nice clean space at this point. So just be a little bit careful about that here. Now I've counted this here as 1, 2 here and 3, 4, 5 to give it, you know, that would be the most conservative count that I could give it. Second count would be putting wave 1 here and copying and putting wave 2 here and looking for this to go further up here. So we're expecting, you know, Thursday to shore up quite nicely for Friday, and look, if Friday closes strong, then you know that Monday's likely to sort of follow through on that as well. And we're looking at a lot of sort of stocks to push up a little bit higher as well, which obviously drive the Nasdaq. So if we look at buggerlugs here, so this is Facebook, Meta platforms. So we've got a nice little impulse wave here. So if that's the case, then this top will be taken out and this will head up to the 500 area here. So we've got markets like that that have still got momentum to the upside on these. So I'll just put this over here. This is still the Nasdaq. It's just sitting on a smaller group 2 here, but you can see here that this just by the buy here, way here, this particular move down through here is corrective. It's in 3 waves, right? So that means that that top will get taken out. So even though it's looking a bit sad on the close here, we're still getting impulse wave up here, so we can still expect it to move up higher here. Okay, so that's just that anyway. So we come over to the Russell. And this particular move through here, it's a little bit shaggedy and raggedy, and I mean it's just, this is you know, there's some of this here we can count down as 1 and 2 and 3, 4, 5 here, and have this as the A wave. We could put the B wave here and be finished at this point, but it doesn't make a very good B wave, and so on. So we've just been a bit careful that this could drop down here further. When I look at the TNA here, this is, yeah, so here it looks like we've got a little 5-wave structure here. It's a bit overlapping and so on here, but this is impulsive, this one here is corrective, and that's impulsive. So it kind of looks like 1, 2, 3, 4, 5 here, you know. We don't have 5 waves coming up here, so it's probably an A wave, a little B wave coming into play here. But the thing is, if this just drops down here a little bit, sort of level to this or thereabouts, and then pushes up there, that's going to leave you this top to go long on at that point. So that would be the safe point at this stage. I mean, currently this dropping down here below this one here kind of forces, look, it could be 1 and 2 and 1 and 2 here to move to the upside, but as soon as that low there is breached, then you know that you're in, this is an A and a B and a C. Not the best impulse wave up here, and you know, a lot of Elliott folks would start throwing rocks at me again because of the overlapping wave structures. Like, I get all of that, but these stocks, you know, all the smaller stocks are, you know, they're being sort of lifted by the other markets, you know. So economists or whatever see them as being undervalued. I just see them that they're being sort of sucked up in the vacuum cleaner, so to speak. So yeah, it's not the best sort of thing there. Let me just, I did have a look at that on the futures here a little bit. This is the same, this pattern here is the same pattern. This is this here just sort of blowing up a little bit. So you can see here that, well, I'll just, for me anyway, this is an impulse wave. This one here is 1, 2, 3, 4, 5 is an impulse wave. This is a little bit corrective, and this is also a little bit corrective. So it's a little bit weird, this structure here. I can probably get 5 waves out of this. So I was kind of looking at this as 1 and 2. 2 here and 3 here and 4 to here as an A and a B and a C as an expanded flat, and then wave 5 here. So we've got this an A wave here and A, B, C for the B wave here. So it's taken this top out through here. So this is really all the pattern across number 5 here at this stage, the midpoint 50 here. And then you've got group 2 here, 1965, 1972 and 80 up there. And this will be your support here. But we should see that obviously there'll be trend lines, you know, till cows come home type of thing. But we could also come back into this space here. But as far as I see, this will be the safe long trade at this point, taking that top out. Now, always, you know, if this pulls down here in 5 waves, you may get an impulse wave here and a classic trading level pattern on the 50 here, so you can drop this down to that point there. Alrighty, I'll leave that at that and that at that, and we go over to the European market. So with the European markets, we were trying to configure this little pattern here, and there's a couple of ways you could sort of play it out. The way that I've played it out so far, I think, is fine. You could look at it in another way, but you'd probably start throwing stuff at me again there too. But what we were waiting for at the 17,000 was the first high above the level. So we've got that first high above the level, so that means that we can go long at that point now. Okay, so now we just got to wait to see what this is here, and it could play out as 5 waves down. So 1, 2, yeah, it could be more. It could end up like this here. Might even come back somewhere up here anyway, and then down again at this point. I don't know, and it doesn't matter, because all I'm saying here is that now we have a top in play, and we can go long above that. We can drag this down to the second high, and we could probably even drag it down to, once we get the first impulse wave up here as an ABC pattern here, then we can just drop it down over here as well. But at the moment, it's just not ready. So we just have to allow it to be. We can see that, you know, it had a beginning, the middle here, and all of this is just rolling over here. So now it needs to rebalance in terms of price. But in the meantime, we can, you know, start by looking to go along above there. And all we're doing now is waiting for a better, a lower price to play out for us. Yeah, so there's nothing really to do here at this stage. So we just need to chill on that. But this will kind of, you know, with this kind of follows the S&P 500 a little bit. So, you know, while the S&P's at 5,000, you know, it's going to reflect back here as well in its own way. I'll just leave that there and move that. And then we've got the FTSE, and you could probably, this is just a daily chart here. I mean, I've got this as an A, B, C, D, and E over here. I think that looks quite nice as a corrective pattern. The fact that this moved up here, just nipping the top out there, makes it, well, it takes it out of the triangle pattern here as an ABC here. I mean, I've seen it before, and I could expand the triangle out, and, you know, I could even put a big wave B all the way over here. But I've just been sort of waiting for this here, and we've got a bit of an impulse wave here, sort of looking okay. And while the DAX is pulling back, well, then we could look at this pretty much doing the same thing after this little impulse wave. So yeah, obviously, you know, as all things have got a beginning, a middle, and end. We've got the beginning here, the building process, the middle where everybody notices and piles on, and then we've got the end here. So we don't want to go long at the end here. That's stupid. So yeah, we just got to wait for that pullback there. I mean, of course, on an intraday basis, we duck and dive and weave and do things, but let's just go in here and look at that particular move. So let's just clean some of this up here now. We're also waiting, like the DAX, just waiting for that top to come into here. There's a couple of ways to play this out. We could put wave 5 here of 1 and 2, and then look for this wave 2 to come back here. So in a nutshell, that 1, 2, 3, 4 here, and then up for 5. It's a dodgy 5th wave up here, but it's still made a new high, so we're going to go with it. The only other element that I could add here is that this could be wave 1 here and playing out for wave 2, and then we'll have 1, 2 here, 3, 4, 5 here, and then we bring this back over to this top here for this. So it's either here or it's here. So knowing those two things, then all we need to do is really just, you know, as we do, we start from the top and we can go like the DAX, we can go along here. And of course, this first move down here it looks a little bit impulsive. Let's just say that it can come down a bit further, but at some point it's going to find support in here and yada, yada, yada. And, you know, it's going to come back again, you know. So then we'll have that second high. So then we can bring that down to this point here. And then we just have to wait to see after 5 waves here. We just need to see, I'm just putting this around the 76 where that support is. But if we see 5 waves back up here, an impulse wave, then that's going to ignite our interest. And then we want to buy the dip on that and manage the risk on that. So that means that that could drop down to that point, that top there, and we put the stop there. And once this is triggered at this point, then we can move the stop and halve the risk at that point. And in the meantime, we can continue to build in longs over here. But like I said, this market will follow the DAX, you know, most of the time in its own little way. It'll move in and out depending, but anyway, all the markets are kind of linked together in their own way, and sometimes they sink in nicely, and other times they don't. So you just got to notice that and use it when you can. But anyway, this is the situation. This is the beginning of the trend, the middle of the trend which we caught, and this is the end of the trend. So now we need to just wait for the rebalance on this and move in, and we'll just, you know, continue to shoot the breeze on this situation as it unfolds. But we could be able to, don't need these, so we could look for some sort of, basically some sort of ABC correction. And technically speaking as well, you know, we would look at the starting point of this 50-60% retracement level down here. Now that may or may not be the case. Sometimes these markets, sometimes they hit on the 61.8% and it's all magical, and other times it's got nothing to do with it. It just does your head in, and you've lost all your faith and hope and belief, and you're just an empty husk. So yeah, got to be as practical as possible. Anyway, that's the FTSE. Nothing to see here at the moment. Yeah, I mean, I can see this could be configured in different ways too, but I'm not going to go into it and confuse it any more than I need to. Then we come over to the Aussie market, and so we were looking yesterday at this situation here as an A wave, a B wave coming back to our target area here and then coming down to the C wave here. So that's still on the cards, right? But at the same time, I can see here that we can look at this as 1, 2, 3, 4, 5 coming down here. And so we put that as the A wave. And this got a bit of overlapping here, but 1, 2, 3, 4, 5 here for wave C. So we could have it as a correction here. But if this is wave 3 here and we're going to wave 4, that means that wave 4 can easily have an A wave here in 3 waves and not 5 waves. Currently here, we could say that this would be 1, 2, 3, 4, 5 for 1 and 2 here. And then 1, 2, 3, 4, 5. So far it looks like a little ABC pattern up here. It's not looking that impulsive down here as well. It's looking a bit corrective here. So I can kind of see the whole thing is working in lots of 3s. So that's not going to make it sort of any easier. But what we could do is that this is the little 61.8% on the lower end of group 2. So group 2 is 65, 72 and 80. And it just really can't find support in group 2. Now it'll keep having a go at that, but all we need to do is just wait for the next first high above the level. So let's just assume for a moment that this is wave. It doesn't have to be wave 1. It could be part of a bearish pattern coming down here, but let's just assume for a moment that this is 1, 2, 3, 4 and 5 here, and giving us that little first high above the level here, right? Then that's where we can go long from at that point. So I do see that the Australian market is in a bullish pattern. So if I just quickly have a look at the banks, because this is dominated by the banks, I just need to get that charting program here somewhere. So Want this one. This is we want the daily chart here to start. Oh, we want, let's just go monthly, and let's just go WBC, one of these ones, and here. So just pointing out here so it's a little bit obvious without going into a whole lot of detail. So we can see that this little move up here would be wave 1 and then back for wave 2 here, and then this would be 1 and 2 and the third wave going up. So as far as the crow flies, I just see this here, this little move here as you know, as 1 and 2 here, and going up for 3, 4 and 5 up here for this. And then this will make a wave 4 here. I'm exaggerating it. That will make that wave 5 here. And that would be that would be here. That would be 1, 2, 3, 4 and 5 to here, and then we'll have a 4 here and then a 5 here. So just to clean this out a bit here, so there you get some sort of idea of what we're sort of what we've got here. So we've got a bullish market at this point. Some of the banks like Comsec have, you know, taken the top out. Combank, whatever, taken the top out here, you know. So there's all the different banks are at different stages, but you can buy and hold banks, and they're paying good dividends. So if we look at the if we look at forward dividends for these, you can just go to the Australian one here for this, and change market volume. So I'll just go over to here and look at ABCD for dividends, forward yields. I'll just have a look at forward yields. I'm just going to put this over here somewhere so we can just have a look at that here. So we can see, you know, the possible forward yields for these here. So WBC that we just looked at here is great. ANZ is like, you know, kicking goals here for this, you know. Anyway, I just thought I'd point that out, that they're good long-term holds for dividends at the moment, you know, but you probably know that anyway. Alrighty, that's my 2 bobs worth. Thanks for tuning in. Cheers.